Ayo, what's the good word with my people, the Chico Army? And if you haven't subscribed, you're just a viewer of the tube. My name is Tyler, and welcome to the crypto channel that's just like this guitar riff. Well, Dadgum It, that was killer. Just like this coming episode, it's time for Chico Crypto. Now I know everyone wants markets to get a moving, a running, and significantly blast off. But a cool off isn't necessarily a bad thing. Like I've mentioned, we are in an area for the Bitcoin price which is unknown territory, above 10K. We haven't spent much time above this level in the scope of BTC's history, and even within the past 2.5 years, we have spent less than 6 months added together above it. But this recent run crossing the mark from July 26th to today, that's 32 consecutive days above 10K. That's actually the longest consecutive streak in the past 2.5 years. Now even if we dip another 1K down to the low 10K levels, if we stay above it, it's bullish, as the price is finding its new ground. But everyone knows that CME Gap before the big old bull run began, the one at the 9.6K level. If you search crypto Twitter by CME Gap, everyone is talking about it. CME Futures Gap in 9Ks. 9 out of 10 times this gap is filled before a major bull run. Hopefully we may see 9Ks before 14Ks. CME Gap is at 9,665. These gaps get filled 91% of the time. BTC will fill the CME Gap at 9,575 and ETH will drop 30% over the next few days, so all alts will drop too. So I would hold back for now and look again on Saturday. Yikes, that would be a very significant drop from yesterday's level of 11,200 to 9,600. That's a nearly 15% thrashing of the markets. So is it gonna happen? Well, no one knows anything for sure, but we can look back in time and compare the past to get a better idea of what could happen. Now, the run up from March to June of 2019 was outstanding. BTC went from the 3.5K range, then got above the 12Ks and peaked around 13K, nearly a 4X. Now, back then there was a certain altcoin leading the markets, Chainlink. In the same time, it went from the 40-cent range to over $4, nearly a 10X. And then using Coin Paprika and Wayback Machine during that time, setting it to July 8th, just after their peaks, we can sort by the best performing coins in the past quarter, or basically 4 months, encapsulating that run up from March to June 2019. Top coins are some random alts like RealTrack, Gracia, XMAX, Clippercoin, and Japan Content Token. But the leading major altcoin was Chainlink. So if you couldn't tell, a very similar thing has gone on with this run. Timescale is a bit more spread out. Last run happened in a quarter, 4 months, and this one has taken about 6 months. Looking at Bitcoin, it went from 5K to 12.3K, nearly a 2.5X. Not as significant of a jump as last time either. But that certain altcoin, Stinky Link, is leading the charge. Over the same time frame, it went from a low of around $1.80 to a peak of $19.50, a nearly 11X. That is very similar to last time, wouldn't you say? Now going to Coin Paprika today, and once again sorting by top coins of this quarter. I wish they had a feature for 6 months, as that is what we need to look at. Chainlink had already surged a good amount, so we are missing out on some percentages. But even with that surge not added in, Chainlink is still at the top. But this time things are different regarding the other altcoins also surging. Most of them have everything to do with DeFi. Aave, Thorchain, Elrond, Reserve Rights, Synthetics, Ocean Protocol, Band, Swipe, Kava, literally a DeFi smorgasbord. Now, what happened after 2019? What happened after the run-up? Well, looking at the Bitcoin chart, within just 21 days after the peak, we dipped and bounced off of none other than 9.6K. Dun dun dun. Chainlink, in the same amount of time, dropped from that nearly $4 range to $2.21, a loss of about 42%. So if 12.3K was our recent peak hit on August 17th, we're just 10 days in since that. Will it be another week and a half before the fabled CME Gap is filled and we bounce off of 9.6K? Will Chainlink drop another couple bucks from where it was yesterday, around $13.68 to the $11 range, a similar 42% drop? Well, obviously people think so. Red days after red days for the past week and a half. So from the thrashing yesterday, of course it was the longs that got liquidated on BitMEX alone. Over 32 million notional value, 24 hours for the day. Not bad, Arthur, and pulling out the liquidations over the past 14 days, encapsulating the entire run and deflation, of course, it's obviously majority longs in liquidation value, over 160 million compared with shorts, which is only about 83 million, but about 50% of the longs. But now let's spread it out day by day. As we can see, long liquidations were spread out over the course of the time period, most coming on 3 days, while longs majority came in just a single day, August 16th. What happened that day? Well, BTC had a single pump up from 11.8K to 12.3K, just a pump of 4.2%, and that liquidated many shorts. So what I see, and I may be so wrong, is the shorters are getting set up and set up big time. There are so many people that think the CME Gap will get filled and think it's a shoo-in. They were setting up their shorts yesterday when I wrote this video. And if the markets are going sideways or even further down today, they are setting up more. All it will take is a single candle whale pump up to liquidate a flurry for them. Just one day. Like I've been saying, those who are in control of the crypto markets, the leverage exchanges right now, the unregulated ones, they decide where the markets will go, not CME and their bearish gaps. This is easier seen when looking at futures volume with Bakkt and CME versus the top unregulated exchanges. OKX, Huobi, BitMEX, and Binance. Bakkt is pink. You can't even see it. And CME is the yellow, barely a sliver. But also, just look at the trend of the volume. It's on the way down. And this is a 1-month chart since July 25th. This means more volume was being traded and set up on the way up than on the way down. So it's in the exchange's best interest to get another run going. That is just my personal opinion. But we gotta speak of what could nullify another big pump up and run, and it has nothing to do with anything inside of the crypto markets. Finance 1.0. It was a shake and bake up yesterday as one of the world's largest companies was dropped from the Dow Jones Index, ExxonMobil, ending a 92-year run with the Dow. Exxon was dropped and 3 were added, Salesforce, Amgen, and Honeywell, all science and tech companies. Is this a sign of the times? Oil is out and the future is here? Well, it kind of is. In 2008, just 12 years ago, Exxon was the praise of the markets. CNBC covered it, saying Exxon's amazing stat, market cap of $400 billion. It was once the largest stock in the S&P 500, and then CNBC said this about it. It's a safe haven, it has a great balance sheet, and it's not going anywhere. Well, anywhere except out of the Dow and down, as the market cap is now barely over $170 billion. Although even with that big shakeup news, the stock market, it bounced yesterday. The news, yeah, it rocked it initially, but it found a bottom and it went up. The crypto markets, they just kept going down. Pulling out an updated chart, because literally I was writing the script and we fell under 11.2K. So if you watched my video yesterday, there is no reason for stocks to significantly fall. Private equity might just get an open door to 401ks, and private equity has been eyeing blockchain. So if stocks bounce, or even if they hold, this in my opinion is a short setup, a CME Gap believer setup, meaning a single candle green dildong could be coming soon. Cheers viewers, I'll see you next time.